Have you ever wondered how Forex trading works? Welcome to the fascinating world of Forex trading, a realm where fortunes are made and lost within the blink of an eye. A world so vast it encompasses every corner of the globe, operating around the clock, day and night. Forex trading, short for foreign exchange trading, is the act of buying and selling currencies. Simple as it may sound, the reality is much more complex and intriguing. At the heart of it all, it's about the relationships between different world currencies. Imagine a bustling marketplace, not unlike a stock exchange, but instead of trading stocks and bonds, traders are buying and selling currencies. Each transaction involves two currencies, which we call a currency pair. For instance, the US dollar and the euro form a currency pair. When you buy one, you're essentially selling the other. It's a bit like a seesaw. As one side goes up, the other comes down. Now you might be wondering, why would anyone want to trade currencies? Well, consider this. The Forex market is the largest financial market in the world. We're talking about a daily trading volume of around $5 trillion. Yes, trillion with a T. That's more than the stock market, the futures market, and the commodities market combined. What sets Forex trading apart is its accessibility. Unlike other markets that operate during business hours, the Forex market is open 24 hours a day, 5 days a week. This is because it's a global market spanning from Tokyo to New York, London to Sydney. No matter where you are in the world, there's always a Forex market open for business. Forex trading also offers a unique opportunity to profit from both rising and falling markets. Whether a currency is going up or down, there's always an opportunity to make a profit. It's all about timing, strategy, and understanding the market dynamics. So, Forex trading is all about buying and selling currencies, but how does one actually make a profit from it? Well, hold on to your seats as we delve deeper into the mechanics of Forex trading in our next segment. Now that we've grasped the basic concept of Forex trading, we must understand how it functions. At the heart of Forex trading lies the concept of currency pairs. A currency pair is a quotation of two different currencies. The first currency listed is known as the base currency, and the second is the quote currency. The pair indicates how much of the quote currency is needed to purchase one unit of the base currency. For instance, if the GBP USD pair is quoted at 1.3, it means you need 1.3 US dollars to buy 1 British pound. Now, let's talk about Forex brokers. These are firms that provide traders with access to a platform that allows them to buy and sell foreign currencies. Brokers make money through spreads, which is the difference between the buy price and the sell price of a currency pair. The lower the spread, the less a trader has to pay in fees. A Forex trading platform, on the other hand, is a software interface provided by currency brokers to their customers to give them access as traders in the Forex markets. This can be an online web-based portal, mobile app, a standalone downloadable program, or any combination of the three. Market analysis is another crucial aspect of Forex trading. It involves studying the state of the economy, observing changes in the Forex market, and using these observations to predict future price movements. There are two main types of market analysis: fundamental and technical. Fundamental analysis involves evaluating a country's economic indicators and performance, while technical analysis involves studying historical price patterns and statistical trends. Remember, in Forex trading, you're not buying or selling physical currency. Instead, you're speculating on the price movement of a currency pair. You'll make a profit if your speculation is correct and you sell at a higher price than your buying price, and vice versa. Understanding these mechanics is key to navigating the world of Forex trading. Whether you're a beginner or a seasoned trader, a solid grasp of these principles can give you an edge in this exciting, fast-paced market. Forex trading may seem complex, but why do people choose to trade Forex? A valid question indeed. Well, the reasons are as varied as the people who participate in this global marketplace. One of the primary reasons is the potential for profit. The Forex market, with its daily trading volume of over $5 trillion, offers a vast sea of opportunities for traders to catch a profitable wave. The constant fluctuation of currency values means there's always the potential to make money, whether the market is rising or falling. But it's not all about the money. For some, the thrill of trading is a significant lure. There's a certain excitement in pitting your wits against the market, making predictions, and seeing them come to fruition. It's a game of strategy, skill, and sometimes a little bit of luck. Then there's the flexibility. The Forex market operates 24 hours a day, 5 days a week. This means you can trade at any time that suits you, whether that's first thing in the morning, late at night, or during your lunch break. This flexibility makes Forex trading accessible to people with all sorts of schedules and from all walks of life. Now, it's important to remember that Forex trading isn't a guaranteed route to riches. It carries risks, and these risks can be substantial. Currency values can change rapidly, and traders can lose money just as quickly as they can make it. That's why it's crucial to manage these risks effectively. This might involve setting stop-loss orders to limit potential losses, diversifying your portfolio to spread the risk, or simply learning when to walk away. In the end, Forex trading is a bit like a high-stakes poker game. It's thrilling, it's unpredictable, it requires skill and strategy, and yes, it can be risky. But for those who play their cards right, the potential rewards can be substantial. Despite the risks, the potential rewards draw many to the world of Forex trading. You're probably now wondering how you can get started with Forex trading. Well, let's delve into that. The first step towards diving into the world of Forex trading is developing a strategy. A trading strategy is like a roadmap, guiding your decisions based on market analysis and trends. It's important to keep in mind that a strategy isn't a one-size-fits-all solution. It should be tailored to your financial goals, risk tolerance, and time commitment. Now, you may ask, how do I create a strategy? This is where education comes into play. The world of Forex trading is constantly evolving, so continuous learning is crucial. There's a plethora of resources available to help you understand the fundamentals of Forex trading. These include online courses, webinars, and ebooks. You can also follow trading experts on social media platforms and learn from their insights and experiences. However, it's not all about reading charts and following trends. Understanding the macroeconomic factors that influence currency values is also key. This means keeping up with global news and understanding how events like political elections or changes in economic policies can impact Forex markets. Once you've equipped yourself with knowledge and a strategy, it's time to get some hands-on experience. This is where demo accounts come in. A demo account allows you to practice trading in real time without risking any actual money. It's a safe space to test your strategy, make mistakes, and learn from them. Remember, the Forex market is open 24 hours a day, 5 days a week. This means you can trade at any time that suits you, but it also means you need to manage your time wisely. It's easy to get carried away and spend too much time staring at charts and making trades, so it's essential to set some boundaries and ensure you're not neglecting other areas of your life. In conclusion, getting started with Forex trading involves developing a strategy, educating yourself continuously, and gaining practical experience through a demo account. Remember, patience is key. It's a journey, not a sprint. Starting your Forex trading journey requires preparation, and these steps will set you on the right path. We've covered a lot of ground today, so let's summarize what we've learned about Forex trading. We kicked things off by unraveling the intrigue of Forex trading. We discovered that Forex, short for foreign exchange, is the marketplace where currencies are traded. It's a global, decentralized market, the largest in the world, operating 24 hours a day, 5 days a week. Next, we delved into the mechanics of Forex trading. We learned that it's all about buying one currency while simultaneously selling another. The goal is to profit from the change in the value of one currency against another. We also discussed currency pairs and how they're the cornerstone of Forex trading. Then we explored why people trade Forex. We found that the reasons are as varied as the traders themselves. Some are drawn by the potential for profit, while others enjoy the intellectual challenge. For many, it's the flexibility and accessibility of the Forex market that's most appealing. Afterwards, we discussed how to get started with Forex trading. We emphasized the importance of education, of understanding the market before you dive in. We talked about setting up a demo account to practice trades without risking real money. We also stressed the significance of having a trading plan and sticking to it. But perhaps most importantly, we underscored the necessity of managing risk in Forex trading. It's a volatile market, and while that can mean opportunities for profit, it can also mean potential for loss. We advise taking steps to protect yourself, like setting stop-loss orders and only risking a small percent of your account on any single trade. Remember, knowledge is power. The more you understand about the Forex market, the better equipped you'll be to navigate its choppy waters. Forex trading is a vast and exciting world, and with the right knowledge and preparation, you could find yourself navigating it with confidence and success.